Welcome to Earnings Recap. Today we're summarizing Evolution's first quarter 2025 earnings conference call.
That's right. We're going to break down this call in plain English for you.
Exactly. We'll hit the key financial numbers, what management said about performance, and their future strategy.
And also cover those important questions from the analysts during the Q&A. Get the full picture.
Absolutely. So let's get straight into it. We heard from CEO Martin Carlson, of course.
And the new CFO, Joachim Andersen. He just joined back in February, right?
Yeah, that's him. So right off the bat, Q1 2025. Well, it seems like a bit of a mixed picture financially.
Definitely a slower start to the year than maybe expected. They called out two big operational things impacting the numbers.
First one was this ring fencing they're doing in regulated European markets.
And the second, their ongoing battle against cybercrime, particularly affecting Asia.
But despite those challenges, the overall tone from management seemed, well, pretty positive for the year ahead.
It did, yeah. They kept pointing to a really strong product roadmap for 2025. Over 110 game releases planned, which is huge.
Yeah.
And they're still seeing, solid underlying demand. They believe online and live casino are still kind of in their early stages globally.
Okay, so let's dig into that ring fencing thing first.
Yeah.
What exactly are they doing there?
So this is them being proactive, implementing technical measures, basically restricting access to their games.
So.
Making it so only locally licensed operators can offer Evolution games in those specific regulated markets, like putting up a digital border.
Got it. And the UK was the first place they did this.
Yeah, the UK first, and then they rolled it out to other European markets during Q1.
And the impact, what did that look like on the ground?
It really varied. In markets where most players were already using licensed sites, high channelization, they call it the hit wasn't too bad.
Okay.
But in markets with low channelization, where maybe lots of players were on unlicensed sites, yeah, they saw a definite drop in revenue there.
Makes sense. How did management kind of frame this? Because it sounds like it hurt revenue short term.
They're looking long term. They see regulation as positive overall and want to support the regulators.
Right.
But, and this is important, they also noted that as a supplier, their influence on channelization is, well, limited.
What drives it then?
It really comes down to the local regulatory framework. Things like tax rates, how actively rules are enforced. They worried that if it gets too expensive or complex for players,
they might just disappear from the regulated market.
Exactly. Or find other ways to play. And they mentioned this ring fencing really kicked off in early February, so Q1 results reflect about 2 months of that impact.
Okay. That gives it some context. Now, the other headwind, cybercrime in Asia. Sounds like that's not a new problem.
No, definitely not. It's an ongoing effort. They said the impact on their network and revenue was pretty consistent with the last couple of quarters.
So that's, 3 quarters in a row now with basically flat growth in Asia?
Pretty much, yeah. It signals a persistent challenge.
What are they actually doing about it?
It's kind of a dual approach. They're actively shutting down activity where they see crime is concentrated.
Okay.
But at the same time, trying to grow in other cleaner parts of the region. They said they're getting good traction, but the combined effect right now is just flat revenue.
And no timeline on when Asia might start growing again quarter over quarter?
No specific timeline given, no. It's a watch this space situation.
So you've got ring fencing hitting Europe, cybercrime hitting Asia, yet they're still optimistic for the full year. What's underpinning that confidence?
It really comes back to that product roadmap. 110 plus games is a lot of new content.
It really is.
And their fundamental belief in the underlying demand. They just see a massive global market that's still got tons of room to grow.
And they're backing that up with physical expansion too, right? Building new studios.
Absolutely. They opened a new one in Romania in Q1, partly making up for lost capacity in Georgia. And they've got big plans for later this year. State-of-the-art studios coming in Brazil and the Philippines, plus a second studio in Michigan.
Wow, doubling down in Michigan.
Yeah, and expanding existing sites too. Malta, Colombia, Argentina, New Jersey, Philly. They're really building out capacity.
It sounds like the message is clear. Prioritize growth and market share right now.
That was explicitly stated. Growth and market share come first, even if it means the margin takes a bit of a hit in the short term while they navigate these operational activities.
Now, you mentioned Georgia. That studio's been in the news before. What's the latest update there?
Management said the situation is stable, no disruptions. But importantly, they've decided not to increase capacity there further.
Why is that?
To get a better geographical balance, basically. Less dependency on one single massive studio location.
And they addressed the past issues, the strike and work environment concerns.
They did. They brought in a Big Four accounting firm for an independent investigation.
And the findings?
According to management, the investigation found salaries were competitive, past workplace issues were dealt with appropriately at the time, code of conduct breaches were handled properly, and strike participation was much lower than reported. They basically consider that chapter closed.
Okay. Good to have that clarified.
Yeah.
Let's put it to the hard numbers for Q1 2025. What did the CEO and CFO actually report?
Okay, so net revenue came in at UR 520.9 million. That's up 3.9% year on year.
Just under 4%.
Right. But they pointed out that negative currency effects played a role. At constant currency, growth would have been 6.1%.
Okay, that's a bit better. What about profitability?
EBITDA. EBITDA was EUR 342 million. That was actually down slightly by 1.1% year on year.
Okay, so that means the margin squeezed a bit.
Exactly. The EBITDA margin landed at 65.6%.
Which is below their full year guidance range, isn't it? Was it 66% to 68%?
Yeah, it is. But they said they expected this. They knew Q1, maybe the first half, would be softer because of the ring fencing costs and the cyber attack countermeasures.
So they're still holding on to that 68% guidance for the full year.
They are. They expect a stronger second half to pull the average up.
Okay. And how did the different parts of the business do? Live versus RNG?
Live casino revenue was EUR 448.7 million, up 4% year on year. They highlighted good momentum in North America and expect LATAM to pick up, especially with Brazil regulating.
And RNG, the slots and other games.
RNG brought in EUR 72.3 million, up 3.1% year on year. That was actually softer than Q4.
Why softer?
Well, they feel there's higher potential there. They did shout out some successful launches from No Limit City, but RNG was also hit by the ring fencing, plus Q1 is often seasonally a bit weaker than Q4 anyway, and North American RNG is still, a work in progress for them.
Gotcha. Beyond the main financials, any other key operational numbers they shared? KPIs.
Yeah, headcount is now over 22,000 employees globally. That's up 8.4% year on year. Big recruitment drives happening, especially for those new studios in Brazil and the Philippines.
Wow, 22,000. That's a lot of people.
It is. They also mentioned their game rounds index, basically tracking how many games are being played. That was up almost 11% year on year.
Driven by?
Mainly the popularity of their game shows, they said. But they did add a little caution. That index doesn't always perfectly track revenue development quarter to quarter.
Right, more an activity indicator.
Yeah.
Now, the fun stuff, new games, they've got a lot coming.
Oh, yeah. They called 2024 and 2025 product lead years. Over 110 releases planned for this year alone.
That's ambitious. What came out in Q1?
They launched the classic casino war game, also Racetrack, which sounds interesting. It's RNG, but with a live host element, and Bet Stacker Blackjack.
And something just after the quarter ended.
Yes, Marble Race launched in early April, apparently got a really strong reception from players.
What's next? What can players look forward to?
They teased a super color game coming in just a few weeks. Then 3 big dice, and one they seemed excited about, ice fishing for the summer.
Ice fishing.
And
yeah.
Sounds like a speed game show involving a money wheel and a live host. Could be interesting.
Definitely sounds different. And on the RNG side?
17 new RNG games launched in Q1, another 19 planned for Q2. They specifically mentioned No Limit City titles are doing exceptionally well, like Duck Hunters had a tremendous start. So yeah, new content is clearly central to their strategy.
Okay, let's slice the performance geographically. How did the different regions look?
Europe was flat year on year and actually down 6% from Q4. That really shows the ring fencing impact clearly, though they insist underlying demand is still strong.
In Asia, still flat.
Stable compared to last quarter, yeah. Up just 2.2% year on year. Again, message was strong underlying demand, big potential once cybercrime is under control.
North America is still the growth engine.
Looks like it. Up 15% year on year. They see live games as still early days there, reaching new audiences. Expanded their partnership with Bet365 in New Jersey, too.
What about LATAM? Brazil, the big story there.
LATAM was up 9.7% year on year, but did dip slightly from Q4. They said Brazil's new regulation had some initial teething problems, maybe started slower than hoped.
But they're still bullish on Brazil.
Oh, yeah. Huge market. 230 million people. They expect activity to pick up. And they mentioned LATAM, excluding Brazil, is actually performing very well.
Any other regions?
Yeah, other regions, which is mainly Africa, continue to show good year-on-year growth. And an interesting stat, regulated markets now make up 45% of their total net revenue.
Mostly driven by Brazil coming online.
Largely, yes. That shift towards regulated revenue is definitely accelerating.
Now, we also heard from the new CFO, Joachim Anderson, his take on the financials.
He echoed the CEO, really, said the long-term growth story is intact despite these current headwinds.
Did he break down the costs much?
Yeah, he went into operating expenses. Total OPEX up 15% year on year, driven by those investments in new products and studio capacity.
Makes sense. Personnel costs.
Up 12%, reflecting that net addition of about 1,700 employees. Other operating expenses were up more sharply, 21%. That included higher legal costs for, as he put it, complex global projects.
But the expectation is that costs won't keep rising that fast.
Right. He expects cost lines to scale slower than revenue over time. That's how you get operating leverage.
Did he mention Georgia's impact on costs?
Yes. He specifically said the less favorable resource mix in studios because of shifting some work out of Georgia after the strike negatively impacted their cost base and profitability compared to last year.
Anything else on costs? Tariffs, maybe?
They're monitoring potential changes to global tariffs, but don't see any material impact right now.
Okay. What about the bottom line in cash?
Profit for the period was EUR 254.7 million. Earnings per share, EPS, was EUR 1.24.
Which is pretty much flat year on year, right? Wasn't it 1.25 last year?
Almost identical, yeah. CapEx was EUR 33.6 million, split pretty evenly between intangible game development platforms and tangible studios, tables, servers. Full year CapEx expected around EUR 140 million.
And cash flow. How's the cash generation?
Still very strong. Operating cash flow after investments was EUR 327.7 million. Cash conversion improved to 87%, partly because they brought down accounts receivables.
So financially solid position overall.
Definitely. Big bond portfolio, nearly €1 billion in cash on hand. Total equity close to EUR 4.2 billion. No major balance sheet changes in the quarter.
And returning cash to shareholders. Dividends, buybacks.
Yep. The AGM is May 9th. There's a proposed cash dividend of EUR 2.80 per share, going to a vote that's about EUR 572 million total payout.
Significant.
And they bought back about 2.1 million of their own shares in Q1 for roughly EUR 154 million. The plan is to buy back EUR 500 million worth in total during 2025, so the next buyback program should start pretty soon.
Okay, that covers the main presentation points. Let's move to the Q&A. Analysts always dig a bit deeper. What stood out?
Lots of questions about ring fencing, as you'd expect. They clarified again it mostly hit in early Feb, so about 2 months impact in Q1.
Did analysts push on quantifying the cyber-attack impact in Asia?
They did, but management stuck to the line that it's hard to put an exact number on it, other than saying it's why growth is flat there right now.
What about underlying growth in Europe, beneath the ring fencing noise?
They gave an interesting number, a blended rate of about 9% growth in the high channelization countries. They stressed wing fencing hits harder where channelization is low because players might just go to unlicensed options if the regulated ones aren't appealing.
So they expect Europe to grow from this new post-ring fencing baseline.
That's the expectation, yeah. Good development moving forward off this new base.
And the LATAM slowdown. Confirmed it was mainly Brazil's slow start.
Yes, attributed to the new regulation taking time to bed in. But again, very positive outlook for Brazil long term because of the sheer market size.
Did they give any more detail on how they're fighting cybercrime in Asia? The technical actions?
They mentioned solidifying protection against theft, detecting it better, which leads to shutting down affected areas. But other parts are still growing. It's this balancing act.
Any more ring fencing planned in Europe?
They said no further proactive actions expected right now. They'll just follow regulations as they evolve.
The UK Gambling Commission review came up too.
It did. Management just said it's ongoing. They've provided all info. Outcome depends on the UKGC. Said cooperation is good.
Did anyone challenge the idea that ring fencing, even if pro-regulation, might hurt if players don't like the regulated options?
Yes, and management explained again that channelization depends heavily on the regulator's parameters. If rules are too tight, players might drift away. They also highlighted their recent European actions were almost 100% proactive on their part.
Still confident in that 66-68% EBITDA margin guidance.
Reaffirmed it as their best current estimate for the full year.
Any other interesting nuggets from the Q&A? Geo-blocking details?
They clarified European geo-blocking is mainly direct blocking of unlicensed operators where local licenses exist. They don't think slower game speeds on regulated sites is a big factor pushing players away.
Reasons for the RNG softness?
Yeah.
Anything beyond ring fencing and seasonality?
Just the ongoing effort to get North American RNG performance up to speed. They still believe underlying RNG is stronger than the headline growth suggests. and confirmed no material changes in commission rates.
What about Asia fraud actions? Any sign of the revenue impact bottoming out?
They said the actions are showing good traction internally, but the revenue impact is still leveling out. Still no specific timeline for growth pickup there.
And live casino growth drivers, new customers or existing ones spending more?
More driven by existing large customers growing their business with evolution rather than adding lots of small new ones right now.
Did they link margin changes to win rates or anything?
No, they specifically said win margins weren't the main driver. Pointed back to that studio resource mix being more influential on the margin year on year.
And hitting the high end of the margin guidance depends on
successful execution of their plans, basically. Hitting their targets.
Last one. The framework for ring fencing. Is it the same everywhere?
No. They apply it in European markets where local licenses exist. But noted that in other places, like the US, the regulatory approach is different. Often the blocking obligation falls more on the operators themselves, not suppliers like Evolution.
Okay, so wrapping up our deep dive here, it really feels like a quarter defined by these big operational shifts.
Yeah, absolutely. Proactive ring fencing in Europe, ongoing cybercrime fight in Asia, both clearly dampened that headline revenue growth.
But you have to weigh that against the underlying picture.
Exactly. That strong product pipeline, the continued global expansion, the solid financial health. It's all still there. Management's optimism for the year really rests on navigating these current issues and executing on that strategy.
It does make you ponder, though, this proactive B2B ring fencing. What are the longer-term ripples for the whole iGaming ecosystem? Finding that balance between regulation and, actual player behavior.
That's a key question. And personally, I'm fascinated to see if games like ice fishing can genuinely shake things up and drive more growth in live casino. It feels like they're pushing the boundaries there.
Definitely lots to watch. It'll be interesting to see how the next few quarters unfold and how well they execute on this growth plan amidst the complexities.
Absolutely. We'll be keeping a close eye on it.